So today's session is being brought to you by myPocketCFO. I'm very excited to bring back co-founder and CEO Alice Zhang, who is the muscle behind myPocketCFO and going to share a little bit more about how to streamline your financial toolkit. So Alice, please take it away.
Thank you, Adrian. Hi, everyone. Welcome to this session. I'm honored and I'm glad to join this. I suppose, for the audience who are joining, you all have you either have some questions or you're thinking about pulling together a system or you're thinking about improving your system for finance management. So anyway, a brief introduction of myself. I'm Alice Zhang. I'm the co-founder of myPocketCFO. myPocketCFO is I call it the only autonomous bookkeeping platform that specifically built for founders of startup CPG brands. And we're aiming for streamline your bookkeeping chore as much as possible, taking off 80% plus of the chore work while having expert human in the loop to assist you in making critical decisions. Anyway, before I start, can I just get a sense, if I could just stop share, can I get a sense, can you type in the chat, what do you want to get out of this meeting? Are you looking for optimizing your stack? Are you looking for putting together a stack? Like what's your main goal out of this hour? I would try to meet all the goals. Can you type in putting together a stack? Great. Great. Putting together a stack keeps me organized. Absolutely critical. Putting together a stack. Wonderful. I love it. If I can just ask one more question, can you type on, and this could be a little bit sensitive because how granular the stack is, it's very much, I think, related to how big your business is, how sophisticated you want the stack to be. So if you could type in the chat and just to share, you want a stack and you can give me a wide range, right? You want your business size, you can give me a size in terms of, are you solopreneur? Let's just say, are you under 1 mil revenue wise, or are you over 1 mil? Because that's that gives me indicator what type of stack I could recommend to you. Okay, under 1 mil, great. Yes, team size is great. Under 1 mil, under 1 mil. Awesome. Team of 2. That's great. Okay, this is the perfect place for you because that's actually it gets me excited because we serve many startup CPG teams like yours, like your size. Typically, I would say under 10. And revenue size, I would say under 1 mil or under 5 mil. That would be the typical, I would say, business size. Okay, cool. So I assume this is the majority of the audience. So I'm going to focus the topic on what type of, I would say, cost-effective and working and simple stack you put together that gives you instant financial awareness, visibility, and helps you to make financial decisions, right? So if there are any questions, we can leave it to the end, and certainly I'd be happy to have one-on-one follow-up if you have any specific question about your business. Okay, cool. So let me go back to share my slide. Okay. And by the way, throughout the presentation, feel free to type questions in the chat box. I'm sure Adrian and I will attend to. Okay. All right. Oops, sorry. Okay, cool. So today's agenda, Okay, first of all, I want to spend some time to navigate the current landscape of financial apps across accounting operations analysis and capital management. Um, in my view, the large part of the incubant of the current landscape, they're more catering to I call middle tier or enterprise customers. They're quite powerful, but in many cases, they're also very, I would say, time consuming and very costly to build and operate, right? So especially I would say for startup CPG brands, if you're, just, going through, getting out of the launching mode, you're growing, um, you want to build some system to give you visibility, give you decision support, but you're not there yet. You can't afford or you don't want to spend so much time focusing on internal system building. Let's talk about it. How can we put together a very simple, affordable, but effective finance systems to support your growth, right? That gets into the strategies of adopting the right apps for where you are right now or in the next, I would say 2 to 3 years, right? And specifically when I talk about finance stack, typically I list out those 5 functional areas for finance stack. Those 5 areas, in my view, they are basically the building blocks to support founders in decision making, right? Obviously, first and foremost, the basic building block, you need to have a bookkeeping, i.e., accounting system. Many founders in my portfolio, in Pocket's portfolio, ask me about, hey, can Pocket help me manage my invoices, manage all the customer when they pay, match up to my invoices? Can you manage my bill pay? Can you collect all the bill and manage the out payment? I typically lump those type of activities, I call them finance operations. So they're not necessarily bookkeeping per se, meaning they're not yet getting onto your book, right? But as part of the business operation, just like, you need to manage some like a sales outreach process, through multiple sales channels. So it's in very similar nature. You need to manage financial operations, meaning administer invoices creation, invoice collection, and administer bills creation, bill collection, and bill outpay, right? The third part of the stack or part of the finance operation typically involves with inventory management. Many of you coming to me saying, hey, Alice, I'm growing, but I'm still small. I'm kind of just, somewhere between 500K a mil. I'm about to hit 1 mil. A lot of the inventory systems out there are just super, super complicated. It's a nightmare for me to manage that. Can you recommend inventory management system, and how does that dovetail into accounting, right? Into my revenue recognition. So inventory management system we're gonna talk about. And then obviously cash and capital management. So when I say cash and capital, I think many of you are either thinking about or you have already raised some kind of capital, right? When I think there are 2 types of capital from my perspective. One type of capital is what we typically call loan, right? Those you borrow from the bank, you borrow from some commercial lenders like Shopify Capital, like MCA, basically merchant cash advance. The other type obviously is equity capital. You get a safe from some angels or from some institutional, could be from accelerators, right? You need to maintain a cap table for to report back to those equity investors, right? If you borrow a loan, you need to maintain a loan schedule. and you may have a covenant report you need to report back to the lenders. So I call those cash and capital management needs you need to put together or start tracking. And last but not the least, obviously as founders, I think many of you really, really want visibility right away. So you want reporting capability, you want to see analysis, you want to see certain matrix, right? You want to see my runway. And anytime, what's my runway? Like, what's my profitability, right? Am I profit by selling into this, let's say, this retailer channel, like especially with all the chargebacks. So anyway, so I would actually carve out finance management stacks into those 5 specific areas. And I'm gonna stop here, and I want to ask any other areas of stack that I have not touched that you want to hear about? Or am I covering all the ones? Okay, so
Give a thumbs up if you're aligned.
cool. Thumbs up. Okay, sounds good. Great. Okay, great. So, man, like I'm a startup founder. I'm kind of around that revenue range as well. I have a little bit bigger team. I have a team of 7. Um, I think, man, it's pretty hard to put together a stack to manage all those. But if we don't have that, we lose visibility. I think that's really, every startup CPG founder, including non-CPG founders, would face, right? So I think it's very important when you're in this stage, it's still quite early, but you start thinking about, man, what type of tools, stacks I should put together, kind of glue all those areas together. So I could I could put my financial docs in a row and streamline that, which gives me real, much quicker visibility, enable me to make critical decisions. Okay. So first of all, let's talk about your bookkeeping. Okay. I think your bookkeeping should be the kind of centralized place where on one side of your bookkeep, you have all kinds of financial transactions. So you can think of your book is the aggregating point. And then on the input side, you need to input all kinds of financial transactions. And then suppose today you have, let's say, most common, probably many of you use QuickBooks. If I may assume, if you use any other ways to do your bookkeeping, let me know. Feel free to type it. But I would say most common setup is, let's say you hire someone, or you by yourself or your partners use someone like QuickBooks. I know some don't have any book. You use Excel file, right? But assume this is the black box, is where you manually status quo, per my understanding, is you have some bookkeeper or accountant, basically, and then you need to basically get all the financial transactions into a system. So you can think of this system as pretty much like a CRM for sales data. This system should be, I would say, a CRM for all your financial transactions. And once it gets in, typically you use some kind of tool, yes, QuickBooks, or sometimes Excel file, and you hire someone or you do it by yourself to organize it, right? And then on the right-hand side would be, I call it, it would be the output. The output could be your financial statements, P&L, balance sheet, and cash flow, could be your analytics, could be some kind of report. You would send it to your investors and lenders. Okay, so let's talk about all the inbound. Yeah, how do you get all those transactions in? That's very, very important, because today, as most of you would confirm, that's my observation with our customers, is even though you might be small, but a typical CPG brand, you would sell across 5 or 6 different sales channels. Type your sales channel in the chat box for me, because typically you sell over Shopify, you sell on Amazon, you sell on Fair, you sell on Maple. There are a bunch of B2B platforms popping up. Of course, you increasingly people are selling on TikTok and on some of the influencer platforms, and some of the specialty events channels, some sell on TV like NBC channel, or some special channels. So there, and then you sell offline as well, meaning many of you sell into the local chain stores, local retail stores. Some of you go sell through some of the third party like Pot Foods, right? Some of the aggregator platforms. Obviously, some of you also sell through some wholesalers, Kihi, or Unify through, like if you sell Whole Foods, you have to go through Unify, right? And some of the bigger national chains, some of you sell, in Target or Costco, or Kroger, many of those either regional or national chains. So man, like easily your sales channel could span, I would say 5 to 6 on average to like more than 10. How I think first and foremost, I would ask the founders to think about what's the best way to get all my sales aggregated into one place so I have visibility, ideally as daily as possible, to have a consolidated income view. And when I say consolidated income view, I would say accrual based, right? Sometimes some channels, it's hard to get real time. You may have to go just look at your bank statement to see all the when they drop the money. But many platforms, like Fair, they drop the money only once a month. And many stores, and I would say retail stores or wholesale foods, they drop the money even later, right? And then with chargebacks. So I would highly recommend you have a system set up to import as much as possible those channels, the orders into a centralized system, so that you could see the accrual based, how literally what's the aggregated order you have on a daily basis. Start with Shopify and Amazon, right? Obviously, Shopify today is doing great because as I know, Shopify already can aggregates many of your other e-commerce, other orders. Like many of my clients, they route their Fair or some other like Maple orders into Shopify. So from Shopify, you could see the aggregated orders there, which is great, by the way. So I would say, so first of all, figure out whether you use QuickBooks or some other system. Obviously, be happy to show you how you can aggregate all those orders through Pocket. And we do real-time revenue recognition automatically. But if you use QuickBooks, I would also suggest you basically ingest all those sales as much as possible on the accrual basis and figure out a way to do revenue recognition. So you have I think real-time income, consolidated income view is very important for the founders, right? The other part I would say of the bookkeeping is think of bookkeeping like a CRM system. The other part is capture all your expenses, especially I would say accrual based as well. Expenses would be any outflow from your bank. Obviously, that's cash expenses. Any outflow from your credit cards. Many founders in the early stage use your personal card. I highly recommend you switch to a business credit card. Nowadays, it's quite easy for you to get a business credit card if you register a company, especially if it's C Corp, even LLC, you can get a credit card pretty easily. if you want to know where you can get a credit card easily, come talk to me. I have many, I think many neobanks refer us for you to get business credit cards. So I would highly recommend get your business bank account, but also business credit card ASAP. So aggregate all your business expenses through your business credit card. Get away from personal card ASAP. It's better to track. Okay. Melissa, you need a credit card. Yes, ping me. Be happy to set you up with business credit card right away. Yeah. Okay. So that covers your cash and credit card expenses. I think many of you, especially for inventory product businesses, if you deal with a co-packer, if you deal with some large bulk purchase from raw material or again, manufacturer, supplier, you may have to basically get a PO and administer bills. So I think on that part, you should streamline that part as well, meaning get a system to manage your bills. So that falls into the bucket of bills and invoice management. Pocket today, we don't administer bills and invoice management. So I recommend many of our customers, they use QuickBooks to basically create, I would say, create bills and manage bill outpay, especially again for PO of your inventory vendors, of your co-packers. I think it's important we track those. Many of the founders use Excel. I would recommend you use some tools. There are other bill management tools like bill.com. By the way, we are partner with a lot of them. I am not, recommending because they're paying me commission or in any way, but just from my experience working with our portfolio customers. I think bill.com, Melio I think Melio functionality wise might be not as comprehensive. Bill.com is pretty comprehensive, pretty capable to manage all your bills, but it's a little bit more expensive. So, but I think it's worth the investment. So either use QuickBooks to manage your bills or use bill.com or Melio to manage your bills. Especially, I think if you have like, I would say like hundreds K worth of spending on your inventory and manufacture outflow, right? And in the bookkeeping system, or I think anyone who is producing inventory, selling inventory-based goods, I would highly recommend you adopt a accrual-based accounting method. Pocket by default is as accrual-based. If you use QBO and hire someone to do your book, please request them to do accrual-based. Because only accrual-based would separate out your cost of goods sold from your inventory spending. Let's say if you sign a PO with a co-packer of 50K of production, that 50K under accrual base would be categorized as inventory spend. But that 50K, if it's under cash based, would be categorized as cost of goods sold, which I highly not recommend doing that, because if in 1 month you spend 50K and under cash base, if that 50K gets categorized as cost of goods sold, that's gonna screw up your gross margin. Basically that 1 month, if you sell less than 50K of goods, then your gross margin would be negative because you spend that 50K on inventory and that's categorized as cost of goods sold. So I highly recommend you adopt accrual-based accounting, whatever tool you use. Pocket by default, we use accrual-based and do it automatically. If you ask accountant, they may take more time to do that, but please, it's really important because your gross margin needs to look pretty constant. And your gross margin should only go together with orders sold. Your gross margin should not be calculated based on how much you spend on inventory, because that's lumpy. You spend inventory, every 3 months, every 6 months, in production. So in the months you spend all the time buying inventory, it should not flow through to your gross margin. Your gross margin should not be affected by when do you spend on inventory. So please remember that, and when you choose a tool that can support accrual-based accounting. Okay, so that's the part of that. And then let's talk briefly about, I would say, inventory management tool. I would say, how many of you are using inventory management tool? I think there are names. Again, I'm not affiliated with any one of them. We could potentially, we could pull. There are Sync 7, there are Deer, there are some other systems I have encountered from our client base. But majority of the client base, I would say under 1 mil or under 5 mil, majority of my client base, they don't use any inventory management system. Some of them use a little bit of Shopify to manage their their product list. Some of them use QBO. Can you type any inventory? How do you manage your inventory? Type it for me. Shopify, great. Yeah, many of our clients, yes, spreadsheet. Okay, great. Most of the customers, I would say under 1 mil, I would say 99% of my clients under 1 mil, and probably 80 to 90% under 5 mil, they either use Shopify or QuickBooks or spreadsheet to manage their inventory, which I think is actually a great way. Yeah, I think when you're small, when you're really just focusing on getting your product out in front of customers, if you overly focusing on, you know, tracking the LIFO, FIFO, what gets into the warehouse, what gets out of that, like tracking in and out. From my experience, by the way, I've worked with my career starts with a business analyst working in ERP systems, supporting enterprise Fortune 500 enterprise customers. That's enormously costly, I would say, to say the least, and enormously complicated if you want to have an accurate inventory tracking and scale, right? So I would say when it comes to inventory tracking system, think about, I would say, especially if you're trying to hit the 1 mil milestone. 1 mil milestone typically in CPG, as you know, it's a key threshold for many like equity investor to even start looking at your company. For even lenders to start considering lending. So before you hit that, I would say focusing on growth, focusing on getting your product out in front of customers. Inventory, I would say spreadsheet, if you ask me, my personal opinion, not representing any other's opinion, I think spreadsheet would be enough, actually. We would be happy to, when you're bigger, do you like Dear best? I think, again, probably case to case, be happy to discuss on your specific case. Obviously depends on how many skills you want to manage, what type of nature of your business. But in general, again, I would say if you have a lot of like inventory spoilage, I think when it matters, meaning think about it, use first principle rule, right? You know, if there's a miss of tracking, how big of a dollar impact you may have. Think about from that perspective. That's why from a CFO perspective, I have a CFO background, by the way, right? That's from CFO perspective, it's how much ROI it gets you by 30% more accuracy, right? Or how much investment you have to input to get you 30% more. If you can track Shopify, if you aggregate a lot of those orders within Shopify and track Shopify, by orders, I would say 20-80 rule. If 20% of effort gets you 80% accuracy, I think that's good enough for under 1 meal, especially, right? It's minimal investment to get you 80% of accuracy and visibility. The other thing is in your bookkeeping practice, this is all tied to your bookkeeping practice. In Pocket, for example, we take a practice of we could do a monthly or quarterly inventory true up, which means you can keep your inventory on the Excel spreadsheet on Shopify or on QuickBooks. Doesn't have to be tied with your, so I'm an advocate for not tying your inventory with your bookkeeping, especially if your bookkeeping is more real time. Because if your bookkeeping is real time, you have to tie inventory real time, which gets really, really hard unless you invest probably hundreds K of dollars to do that. Then in that case, I would suggest you separate out, don't tie them together. Many of the ERP users coming to me saying, to set it up and to make it really flow through real time from inventory to my order to cash to my book, it's really, really hard. And I have to actually hire extra person just to do that administration, operation work. I would say if you're under 1 meal, my personal opinion, again, not representing anyone, then it's probably not worth the effort if you have to hire someone just to do that part, right? And you don't see, that impact your sales that much. So I think to untie it is totally okay if you're under 1 meal. And when you untie it, a way to basically make sure to manage your risk is monthly or quarterly basis. I would recommend you to do an inventory true up, right? Inventory true up would be either you yourself or you work with us, our CPA could do it, or you work with your accountant. Basically on a monthly or quarterly basis, depending on your, I call cash conversion cycle, your inventory production cycle, roughly, if you produce or buy inventory every 3 months or every 6 months, you could follow that cycle. Then you just update your do your inventory count every 3 months or 6 months, and then do a real count, calculate the real cost, and then ask your CPA to do a true up on your book. That latency to me when you are small is okay. Obviously there could be exceptions based on your business nature. Be happy to talk to you, but I would say that would be in your Excel spreadsheet, and you keep your skill, keep your units by skill, keep your finished goods, your raw material, and your manufacturer labor. The other question some people ask is, do I need to keep track of my raw material, my labor, manufacturer cost, my inbound shipping? How do I maintain that at that conversion with my finished goods inventory, right? What type of granularity I should track in the inventory? So my answer is, if you really want to keep track that kind of conversion, every month, how much raw material left, how much I spend on manufacturer labor, how much I spend on inbound shipping. By the way, inventory cost typically consists of 4 components, right? One is raw material, one is manufacturer labor, the one is packaging, and then your inbound cost. Those 4 would be more of a basic components of your inventory. And then when you put all those 4 and then start producing, then you have finished goods. So if you want to keep track of those 4 components, then you need to keep track of every month how much is left on each component, and how much has been converted into finished goods. That itself, I think, could be worth probably a half a time person using some of the inventory tracking system to track it. So again, my personal experience working with a lot of the under 1 meal startup founder is to go with more simple approach is just track your finished goods. Track your total spending on raw material, track your total spending on packaging, track your total spending on manufacturer labor and inbound cost, track those at the spending level. Without the inventory management system, it might be pretty hard for you to track the conversion among all of those components and how they convert it into the finished goods. So my recommendation, again, personally and in general, if you're under 1 mil, just track the total spending, and assuming all of them just lump into one category called inventory, regardless of its part and parcel or if it's finished goods. If you there are even with Excel spreadsheet, you could also track and granular level. If you want to do that, be happy to talk offline on that. You could track, I would say, monthly or quarterly using Excel spreadsheet. But in general, if you're focusing on growth, I think just at that inventory level, total spending, I think is totally okay. Okay. I think we touched on bookkeeping system. We touched on invoicing and bill management system. Just so you know, for invoicing and bill management, that itself is a chore. And you may think of having either you or one of your ops person can probably administer, administer bill.com, administer your QuickBooks invoices. That part, it needs sensitive access to your banks, for example. So probably you want someone you trust. And typically an early stage, I would say that part of the operation typically can be spread among the co-founders or among the initial team, the 3-person or 5-person team, because you know each other really well. You know you can trust this team, whoever the internal team, to manage the bill. Many times founder at this stage, they administer by themselves. I would say a pretty good gauge is if you manage less than 20 invoices or bills per month, in my view, it could be manageable by founder yourself, or by just like if you have an ops person, that ops person can use tools like bill.com or QBO to manage that. If it gets over 20 invoices per month or bills per month, it gets a little bit harder. And I can advise you ways to streamline more. We do have some third-party tools. We partner with a number of partners like Streamline. They help manage your order to cash. We partner with Upstairs, some other either early stage apps or a little bit bigger, more mature apps, but in general, they serve SMBs. So happy to talk about utilizing those apps to streamline your invoice and bill management. But if you're really small, under 20 per month, typically you can just do it by yourself. That would be my recommendation. It's for cost-effective, ROI effective operations, right? So we talk about that, and we talk about inventory. Again, when you're small, I think you can pretty much do it by yourself. And happy to lay out a process where you can streamline as much as possible. But I think when you're small, you can afford the latency. So the cadence doesn't have to be real time, in my view. It could be per month, could be per quarter, based on your inventory production cycle. The key is the inventory spending you should track and should not interfere with your cost of goods sold calculation. That's the key, because you want to preserve your accuracy of your gross margin, gross profit calculation. That's very key for reporting and for cash and capital fundraising. Okay. And I think if I go back to my slides, we talked about, I think I kind of blow through the system strategies for adopting the right apps. Again, I think a lot of the apps out there, most of the apps, they're catering for above 10 mil companies. So in my view, if you're under 10 mil, especially if you're under 5 mil, especially if you're under 1 mil, most of those apps there, I think they're super expensive and incur additional labor costs. So think about it. If you want a ROI calculation, happy to consult and help you figure out the ROI calculation. So when you're under 1 mil, I recommend use the very basic tool, very cost-effective tool. I think accounting obviously, plug in, happy to offer Pocket. You pay $199 and we cover your full accounting CPA review every month, reconcile every month. We cover everything. Invoice and bill management. I think I would recommend you use a tool like QuickBooks, like Bill.com, like Melio.com. We partner with all of them to streamline your invoice and bill management. If you need some third party to kind of manage the collection part, manage the pay, all pay part, I'd be happy to recommend tools again like Streamline. We're partner. We actually give special discount like Upstairs to auto create invoices and manage some of the order to cash. Inventory management, if you are using some of the system I'm familiar with, again, but if you're under 1 mil, my personal preference is you don't have to, because those systems typically are quite complicated to set up and to administer. You probably need a half person, if not one headcount, to just manage that. And I think inventory, typically you can afford the latency, like I mentioned, at this early stage. Cash and capital management. At this early stage, I know some of you use some of the cap table management tool. I personally, I used Carta before. Carta is pretty expensive in my view for early stage companies. There are some Carta alternatives. I would say if you just raised some safe, if you don't have institutional VC investor, again, my personal preference is you can actually manage the cap table using a simple Excel spreadsheet. If you have less than, let's say, 12 investors on your cap table, on your equity table, and all of them, they're angel investors, all of them, they're just using a safe vehicle. I could give you a template. Basically, you can use that template that's how I do. By the way, you can use that template to manage your cap table. Reporting and analysis. So I think, again, I'm in your camp. So that's why I'm like, I'm super, scramble. I want to use the cheapest tool to manage 80% of what I need. That's my philosophy, right? So for reporting, I think most of the time the accounting tools or give you some kind of reporting, like Pocket, we give you financial report right away. We give you some analytics right out of the bat. I think if you use other tools like QuickBooks, obviously it gives you a bunch of reporting, financial statement, aging report. You have all those reporting already. I do want to talk a little bit about forecasting needs. So if you, even though you're just 1 mil, I think a lot of you, you're thinking about going out, raise, let's say an angel round. Even if you want to raise in some crowdfunding platform, again, we also work with a bunch of crowdfunding platforms. You may need a forecast report. So I think at this stage, there could be two ways to do forecasting stack-wise. You could I think many of you probably go into some of those accelerators, or you may have some consultants, you may have some templates for forecasting. I would encourage you use those templates and do your forecasting just on the Excel or Google Sheet. I think in general, that's good enough. Some of the tools, for us, we're still developing, but I think the goal is you will be able to monitor your forecast against your actual. That will be the step 2, a step up. I think 90% of the founders today probably don't do that, but you can kind of know in nature by heart or by intuition, whether you're hitting your forecast or not. It's very key. You have the forecast, you update. I would say if it's not monthly, do it on a quarterly basis. So you have a good sense of how good this forecast is, right? There are forecast tools we also partner with, Pocket partner with. I think forecast, I can again send you our partner tools. Forecaster is one of the tools where we actually plug in. We just send it to them. And if you use some tools like that, they also have a tool. They have analysts to help you build your forecast. But again, I think you could use the tools. Those tools could range, could be a couple hundred per month for you to use a tool to produce that. Typically, forecasting is not month to month routine. You build it once and you kind of use it for rest of the year, or you update on a quarterly basis. So you could choose to use a tool, or you could just choose to use a Excel spreadsheet or Google Sheet. So I have templates I'd be happy to share. Or if you want to use some of the tools, I'd be happy to recommend. Right. So by now I think we only have about 12 minutes left. I cover all those. The one thing last thing I want to cover is I call cash capital. Cap management, as I mentioned, you could probably administer through Excel if all you have is less than 10, angels. I think for lending, there are a bunch of lenders out there. And from my experience, a lot of early stage founders, you're borrowing. Now you borrow from Shopify Capital, some of you borrow from Settle, some of you borrow like Keep Further, they're all our partners. In those ways, I would say find a system that could basically plug into those lending platforms so we could track your I call loan schedule. That's very important. Either you use someone manually or you use a system and make sure we can track your loan schedule, especially if you have 3 or 4 lenders. The worst scenario is you run out of cash and you may at risk of default. I know some of the lenders like Settle, they do require you to send them a P&L, like a reconcile P&L on a monthly basis. Some other lenders, they're more MCA, like Shopify Capital. We also partner with Payoneer. They do MCA on Amazon. They administer based on your Shopify and Amazon payout. Basically, they cut the payout to their account, they take off their portion, and they remit the rest of your Shopify Amazon revenue back to your account. But of all those, if you do have more than 2 lenders, it's important on your book, whether you use Pocket, we do, we do help you manage a I would say lender schedule on your balance sheet. That's the other point I want to make. Is very important you do accrual. Only on accrual-based accounting, you can maintain a fairly accurate balance sheet, especially if you borrow from 2 more lenders. It's very important on your balance sheet, you keep all those loans and their ending balance correct. Also, you may want to split between the principal and interest, just so you have understanding how much interest you're paying out. So those are important you keep track with, right? So I would say whether you do manually or use a tool like us, keep a clean balance sheet so you know how much you owe on a monthly basis, if not at least on a quarterly basis, and you know how much inventory you like end of each quarter. And you know what's your consolidated cash schedule. Those are important. I would say the balance sheet, in my view, for under 1 mil, the latency we can afford a little bit longer. So you can have an accurate balance sheet, and I would say monthly or even quarterly might be okay for you. They're not like the most real-time demanding, in my view, when you're under 1 mil, because typically they're not so material. They account for a lesser part of your overall business decision making. The P&L latency you requirement for under 1 mil is more urgent and more real time, in my view, as a CFO. So as founders, you want to adopt a tool, or if you hire someone, you want to request and demand them to give you more of a real-time view and more updated reconciled statement on the P&L as near real time as possible. So you know on a daily basis what's your consolidated income and sales, what's your consolidated cash outflow, and what's your margin. That's very important. Whatever the on the balance sheet, I think typically you want to maintain a latency of accuracy of I would say quarterly. That would be a good way. Some of you might be able to do it better on a monthly, but I would say at least quarterly. But P&L, you want it more real time. Anyway, I'm gonna stop here. I think we're running out of time. I could talk about this whole topic for another day. Adrian, shall we open up the floor for questions?
Yes. Would anyone else like to ask a question? You're welcome to raise your hand, unmute yourself, or drop it in the chat. So many options.
Alice, thank you so much for all of the information. On the inventory management piece where you were mentioning the four components to track at the total spending level, I missed one of them. I caught finished goods, raw material, labor. What was the last one?
Let me type it. So inventory components, right? Raw material, manufacturer labor, packaging, and inbound shipping, basically. So it's important your outbound shipping goes to operating cost because that's part of you fulfilling the order. Inventory, any cost associated with producing the goods, that should be considered input for inventory. So inbound cost, I should just say inbound cost, may not like not just shipping, but inbound cost, packaging, raw material, and manufacturer labor.
Thank you.
You're welcome. Okay, we
Next
have a
question.
question. Go ahead,
I
Adrian.
was just going to read it to you. Is there anything in the stack we should forget from 5, 10 years ago compared to today? Any outdated practices we shouldn't use anymore?
Okay, let me read it once again. Elizabeth, do you want to elaborate what specific thing you're asking?
Yeah, hi there. Can you hear me?
Yeah, I can hear you.
Yes, hi. Yeah, I'm just trying to understand if there are any practices from like pre-COVID, that time period that like we shouldn't be thinking about or concerned about anymore. Like if processes have changed and we should forget certain thinking, or certain ways of building a stack compared to today, or if there's certain changes in the stack compared to today that are important to make, like what should we focus on in terms of like updating the stack? It's kind of
No, that's a
yeah.
great question. Again, whatever I tell you, it's my philosophy, it's my personal opinion. That's what we're building Pocket for. You know, I come from a background where I worked on, you know, very heavy, sophisticated, but also complicated, costly ERP system. I would say 5 or 10, or especially 10 years ago, we're relying on ERP system to build the stack. Which is super sophisticated, like we are calling bill of materials, right? For every piece of raw material we want to track. But those systems were literally built for enterprise companies with 100 mil plus revenues, and it's super costly. And typically they require a lot of specialty professionals to consultants, talking about SAP consultants, super, super expensive to do that. Fast forward today, because data are readily available because of open banking, because of e-commerce, I think today's modern stack, in my view, is I think company as small as under 1 mil could also have a ERP system to manage their to begin with finance and operations. I'm yet to see a really, really lightweight inventory management, for example. That's why I'm saying right now you don't have to have that. But that's what Pocket is for, is we want to build a really lightweight, just kind of we just grab, you know, we build pipes to get all your financial data, because those financial data are readily available for a lot of the especially modern CPG brands. And then we just spin out your book like daily. I think we should really, in terms of modern stack, I think modern ERP should be not so complicated. The old traditional ERP is also like, it's very fragile. For example, if you make it wrong on one thing on inventory, you cannot, the whole book is spoiled, right? Sometimes, you know, like with all due respect for QuickBooks, if you use your inventory module, but if you make one, if you don't update, it's all collected, and their book, your cost of goods sold or your inventory would be totally wrong. I personally think the modern stack should not be that fragile, because the complexity of sales side, complexity of supply chain is just super fragmented these days. So I think for a smaller, you know, growing CPG brands, I think the modern stack should be, it's more plug in, you know, and doesn't have to be so fragile. I have to require every piece of inventory to be correct, 100% correct. It's more tolerant. That's my view. Is you can just slap onto it. It's kind of like an iPhone app. You just slap onto it, you open it, it gives you 80% directionally right reporting. That's all you need, because things move so fast these days. You need to get real-time insights and directional signals. You just need to get signals. And the signal, in my view, doesn't have to be 100% accurate. Signal could be 80% directionally right, and you know which direction. Should I jump onto TikTok or not? I want to see my TikTok, you know, contribution margin. I want to see my investment on TikTok marketing. So we can give you those kind of real-time tracking. It may not be the full three financial statement, but if we can track that one piece of matrix for you, or just track the P&L for you real time, you should take that as like signal comes quick and goes quick. You should act quickly. But for some of the later, more tolerant, I would say, again, balance sheet matrix, you can tolerate to be not so real time, could be quarterly, especially when you're small, because that's not going to damage your business that much with that latency. So we should decouple all those. That's my view, is think of really scrappy way to build your stack. Don't think of the ERP way, like everything has to be dovetail 100%, because that's going to cost you 100x higher, and it's probably not worth investing at this point of time until you hit like 50 mil, for example, right? So that's my philosophy. And then to be scrappy, build a just plug-in and working tool, and focusing on the 80% directionally right signal, and you could just act quickly, go quickly, which gives you the biggest bang per buck. That'll be my answer. I hope that answers your question.
Well, we are just about at time. Thank you so much, Alice. You're wonderful. I really appreciate your support and advice. Last question for anyone that has a few minutes to stay on, or we can conclude and be sure to see Alice again next season.
Yeah. Well, thank you. Thank you, Adrian. Thank you. I really enjoy talking to the audience here. Again, plug in here. If you want to build a stack, I'd be happy to put it together. We focus in Pocket, we focus on bookkeeping, real-time autonomous bookkeeping, but with a human CPA and CFO in the loop. Happy to chat afterwards. By the way, we're running at $1 for your first month for free. So welcome you to try Pocket, and we will try to use Pocket to build the full stack for you with our partners or, you know, with your Excel spreadsheet. So reach out to me if you have more questions or if you're curious, interested to try us and try the stack, I could put it for you.
Great. Thank you so much again.